इधर वहाँ पे लेना चाहिए ना, कितना आवाज होता है इधर।
हमारी भी कंपनी है, हमारी यूरोप की कंपनी है, लिक्विडिटी प्रोवाइडर में फर्क पड़ता है। वो लिक्विडिटी प्रोवाइडर की तरफ से फर्क पड़ता है, वो हर एक कंपनी का वो डिफरेंस आने वाला है, थोड़ा बहुत। अब वो जो आप दो कंपनियां चेक कर रहे हो, शायद दोनों कंपनियां यूके की होंगी, उनका थोड़ा बहुत कम डिफरेंस आ रहा होगा। अगर आप दूसरी कंपनी को लोगे और एक दूसरी कहीं और की कंपनी को लोगे, तो वहाँ का
Hello.
बात बदल वेबिनार से अंदर बैठे बोला है ना। एक कंपनी का ब्रांच है।
Hello and welcome to the new session of webinar for today. And today's topic, which I'm going to take, is Fundamental Analysis Part 1. My name is Badal and I'm from Admiral Markets. You can visit our website www.admiralmarkets.com. I hope you guys are able to hear me and see my screen. If anybody doesn't, you can say. I mean, you can just wave your hands up.
The broadcast is now starting. All attendees are in listen-only mode.
Hello and welcome to another session of the webinar, and today's topic, which I'm going to discuss, is fundamental analysis. My name is Badal and I'm from Admiral Markets. You can visit our website at www.admiralmarkets.com. Now, today's session is all about fundamental analysis, part 1. Now, what do you mean by fundamental analysis? Well, as everybody know, that there are two important things which is used to make any analysis. The main and the important ones. Well, I wouldn't say I can compare it as such, but it is a fundamental analysis and the technical analysis. Well, I'm going to discuss today is the fundamental analysis. Now, the fundamental analysis, the method of analysis of security prices. Well, here I'm talking about security, but yeah, well, we are into Forex market, so Forex, currency markets, you can say, or the commodities one. Well, using such fundamental factors. Now, what you can say are the fundamental factors? The fundamental factors are the political ones, or any political event as such, which would affect the currency of that of that country. The interest rate, well, here the people or the government or the main people involved in the decision of the interest rates are the governing bodies. I mean, here, well, in Europe you have like the ECB, and in the US you have the Fed. So like that. So here the Fed and the ECB decide the interest rates. Who are there? The social economic factors. Those are again the important ones. Any natural calamity happening, for example, the tsunami in Japan, well, that would affect the overall economy of any country. So why is it important? Why do you need fundamental analysis? Why does one needs this? The very first thing, very important one, it helps to identify conditions for breaking the existing trend. Yes, definitely, because if you have the news, whatever the existing trend which is continuing, you will be able to break that. Okay. it helps to understand the cause of what is happening in the markets. That's true. Again, it is widely used for long-term forecasting. Definitely, when you take fundamental analysis, you always talk about the long-term forecasting. If you talk about technical, then you are looking for short-term gains. And as Shuli said, it helps us to understand the cause. Definitely, what is happening in the market, you will be able to know in when you do the fundamental analysis. Basically, you're talking about the news. Yes, the subjects, as I mentioned earlier, the central banks, the ECB, the Fed, the Bank of England, okay, Reserve Bank of Australia. These are the ones, I mean, who are the policy or the decision makers, the governors of these banks. Macroeconomic data, yes, that becomes again the subject. The economic calendar, where every week you can say there is some other data which is coming. So you will say that what will you have in this economic calendar? Basically, you get all the data, like you have the retail sales of any country, you will have what you can say, the non-farm payrolls, well, in case of the US government, which publishes every now and then, or you will have the CPI or the consumer price index data, or any other such data, or you have the unemployment figures which would be coming up. Then again, for the intermarket analysis, the interconnection of markets, that's very important. Again, other things which can be discussed here, the carry trade and the sovereign crisis, which is right now which is happening in the European region. Okay, so these are the important things, or these are the subjects in the fundamental analysis. The policy of central banks. What is the essence of the monetary policy? The monetary policy is again very important for any, from the point of view of any central bank or any economy as such. In the monetary policy, well, there is a difference between a fiscal policy and the monetary policy. The monetary policy is always designed by the central bank of that country per se, or the fiscal policy, which is like kind of the budgeting thing, which is done by the government of that country. So there's a difference. In the monetary policy, you decide the interest rates, okay, how to go about then printing of the currency and all that thing comes in the monetary policy of any country. Quantitative easing, well, you might have heard this one many a times. Quantitative easing is like you inject a lot of liquidity, or you print money. You print money and inject that same money in your economy. But what happens when you inject such some huge sort of cash in the economy? Altogether, the inflation goes up. Same what have happened in the last few years in the US. Quantitative easing 1, you might have heard. Quantitative easing 2, the US government printing money and injecting in the economy. They gave rise to the inflation. Then again, the statement, the minutes, and this is the meeting protocols. So any statement by any governor of any central bank will have an effect. Minutes is like, again, a session for any of an important person, where he would say some other thing, and that will have an effect. The meeting protocols is like any of the meeting is supposed to take place. The OPEC meeting, I can say, the OPEC It's like the organization of your petroleum exporting countries, you can say. So, well, if they have a meeting and some or the other news comes out before the meeting, well, that would have an effect on the oil prices anytime. So these are the things which you need to keep in mind for the fundamental analysis. Well, this is like a diagram which I would like to always show. This is like the essence of the monetary policy. How does this work? The main function of the banking system, what do you see, is like the supplying the economy with the money, the loans. Yes, that's the main function of the bank, any banking system. So what does basically a central bank do? Well, what they do is they print money. They give into this two, three commercial banks, and then what these commercial banks do, they circulate this money, which is printed in the economy, and the money keeps on circulating, and it changes hands on hands. So, accordingly, the money comes in your hand, my hand, and something, it changes here and there. So again, it's from the central bank to the banking system, and then in the economy it keeps on circulating. Here we come up with an important term called as the refinancing rate. What is that exactly? The rate at which any central bank finances the commercial banks. Definitely, that's a refinancing rate. Finances is like whatever, at whatever rate it lends money to the commercial banks. That is a rate. You can say like the interest rate or something. That's a refinancing rate. Then again, while determining this, what is the value of the economy? That's what they take into picture. Okay, so central banks keep it in mind. It is a very clear picture. They keep it in the mind, and then accordingly they keep it. And because even if the interest rates go high or low, or if there is any change, it will have an effect on the overall functions in the economy. Because interest rates going up and down will have an effect, as we all know. This is like a kind of an explanation, I can say. When there is a recession in the economy, the central banks decrease interest rates while pumping the economy with money in order to stimulate the business activity and prevent the development of the deflation process. Well, let me tell you this. Deflation is always, what you can say, it's very bad, or the worst than inflation. Okay, inflation up to a certain extent, definitely it's good for the economy, it has to be there, but deflation is very bad than the inflation. When the economy is on the rise, there is an overheating risk, or the risk of serious inflation growth. And what does the central bank do in that case? The central bank starts to increase the interest rates in order to halt the business activity and the rise in the inflation. So whenever these people in the central bank or the governing bodies, they increase the interest rates, it will have an effect on the overall economy. Accordingly, the interest rates of whatever you borrow, it will increase. So what will happen is like you will decrease your borrowing. So accordingly, your inflation will be in control. Okay, so the overheating economy, whatever you say, so that will come. I mean, the interest rate or the inflation will be controlled up till a certain extent. Decreasing the interest rates, that's easing of the monetary policy. What do you do basically? You decrease the interest rates. What are you doing? Whenever you decrease the interest rates in the economy, okay, it makes your loan cheaper. Okay, you have more money available in the economy. Okay, So whatever your mortgage or your consumer loan, etc., okay, and as a result, you stimulates the consumptions and the business activity in the economy. So your activity in the business, whatever business you have or you're running, okay, that will go up accordingly. You will borrow more. Okay, so your deposits, your bonds, if you're purchasing, there will be a fall in the interest rates accordingly. And then uh, the domestic market, what do you have? Okay, it will have more money available. So all the businesses will go here and there and they will borrow these cheaper loans. Okay, and then again, when you have more money, you decrease the value of your money. And you decrease the value of your money, more money available. So overall, the things which are cheaper, accordingly, the prices will shoot up. And then again, the same picture, you will see inflation in the economy. And again, it will keep on increasing, and it will result in a bubble formation. Again, the negative effect on the domestic currency. Definitely, inflation eats the value of your money. That is for sure. Inflation will eat the value of your money. The value of your currency will depreciate. That will depreciate for sure. So, bubble formation, the very good example is the 2008 crisis of the US. What has happened? You always say that it was a housing bubble. Definitely the loans were very much cheaper. Okay, anybody who doesn't have that ability to purchase a house was given loans. So loans were available at the cheaper rates. Okay, but what happened is everybody bought houses. But what happens? Okay, accordingly, the person who is not able to repay the loans, okay, they started selling houses. Okay, and when they started selling houses, naturally, if I sell a house, definitely it has an effect on the person just staying next to me. They also started selling houses. So group of people, they started selling houses. Naturally, the value for the house, okay, of your house, it starts going down. Of your house will start go down, and then what will affect? The overall effect is like the housing market or the bubble. It burst and it crashed. So that's how there was a fall in the housing prices, and that's how this overall 2008 crisis took place. The effect of the rate change on the economy. What will affect? The increasing interest rates, the monetary policy tightening. I mean, that's again now the reverse trend, I would say. What will happen? Whatever the higher cost for the loans, okay, it will result in that. So what will happen is like whatever loans you're going to borrow, that will become, not cheaper, but it will increase. The interest rates will increase on that. So thus, okay, when you increase the interest rates, it will be very difficult for any retail or an individual person, okay, to borrow the loans. So again, what will it result into? The rise in the interest rates on deposits and bonds. Yes, definitely. The bonds and deposits, okay, they will be in demand. So you will always increase the interest rates on that. Now what will happen? It will again put some pressure on your domestic stock market. So what will happen? Your interest rates or whatever, if you have changed, the markets will start going down. Okay, and again, it results in the decreased inflation in the economy. So what will happen? You will stop borrowing. You will stop borrowing the loans, and what will, accordingly, the inflation will be in control. So again, the positive effect on the domestic currency. Your currency will appreciate.
No, you sent me a name and a number, and you told me that
The interest rate dynamics. If you see, um, these are the interest rates of different countries. At the lowest position, you have the Japanese yen. Then you have the Swissy and the Swissy LIBOR. And then you have the Euro reference rate. Then you have the US Fed funds. Okay, and then on the upper hand, you have the Great British pounds and the repo rate. Okay, so what will happen is these are the things. I mean, these are the interest rates which keep on changing every now and then, here and there. Now, what do you see? I mean, what is the connection between the monetary policy and the Forex market? In Forex market, definitely I would say any retailer who comes in with any money, you would always look for news and announcements or anything, any hints. And so what will happen is like the rumors or the announcements of the leaders. I mean, definitely the chairperson, the important macroeconomic data. It will have an effect on a possible tightening of the monetary policy. They will have a supporting effect on the currency, definitely, that's for sure. So any hints, you always look for hints or signals. So what will happen is like this cycle of inflation, deflation, the increase of interest rates, okay, the decrease in the interest rate, okay, that will keep on happening every now and then. Okay, you buy rumors, sell facts. That's correct. Okay, so you always buy rumors, okay, but you sell facts. See the example, very good example. This is like, well, let me tell you, this is the chart for the Euro USD. You have some rumors there that the euro will fall and US dollar will appreciate. So what had happened? The euro started falling down, the US dollar started appreciating. Now what happened? The Fed started a tightening cycle. They increased the interest rates, and accordingly it had an effect on the overall US dollar. What happened is like the US dollar started depreciating. So here, if you see, the Fed started a tightening cycle, they increased the interest rates, so had a bad effect on the US dollar. Euro started appreciating against the US dollar. So accordingly, the euro it went up, okay, but again, something might have happened, some other news. Euro started appreciating. So, I mean, here, if you see, Fed started a tightening cycle. So that had an effect on the US dollar. Again, a very good example for the ECB, Jean-Claude Trichet, who is the ECB governor, or you can say the chairperson. What he says that ECB vigilant on inflation. Well, this was an announcement from a chairperson, an important person from ECB. So what happened is like this was a positive news for the euro, from the euro region. So euro started appreciating from 3135 to 3286. That was almost an appreciation of 160 pips. So if you see any important announcement or any news, okay, or any statement from any important person, okay, or of the subject of forex market, it will have an effect on the euro. Well, that's all about its fundamental analysis. Quantitative easing, which we were talking every now and then. What happens in that exactly? It happens in this way. You're purchasing of the securities of your, like you can say, the mortgage securities, your treasuries on the central bank balance sheet. By buying this financial securities, the central bank may either increase or decrease the supply of money in the system. When they will buy any security in the market, they will release the money. It's like a printing press, I would say. So what will happen is, like, there was a purchase of securities. So during 2008, December 2008, well, in September 2008, there was recession. I mean, there was like a tipping point of recession. So what happened is $1.7 trillion that were increased. So Fed started printing money and infusing it in the economy. Again, the QE2 took place in November 2010 and June 2011. Between these 6 to 7 months, $0.6 trillion were infused. So what happened? Inflation started increasing. So again, you have an effect accordingly. The quantitative easing, it's rightly said that it may review the economy and the bank lending. Okay, but while, I mean, it will have, it will cause a decrease in the domestic currency, and again, the increase in the demand for stocks and commodities, definitely. At that time, if you see the gold prices, silver prices shoot up like anything. Okay, so it had an effect. When you have a lot of money, okay, in the economy, at the same time, if you see the data, the past data of the last 2 years, during 2008, 2010 or something, you will see that the US dollar started depreciating. US dollar started depreciating. The demand for stocks and per se the commodities majorly, if you see the gold and silver, who are highly dependent, I mean, these are like the dollar-based commodities. So US dollar started depreciating in value. Okay, so what happened? The demand for commodities started increasing. You always see this. These are like, this always has an inverse effect. So it started increasing. The value started, or the demand for commodities started increasing. So accordingly, your prices started shooting up. This was between 2001 and 2006. Bank of Japan, they had a quantitative easing. What happened is, you have the base money, you have the broad money, and you have the bank loans. You have the M1, you have the M2, and you have the M3, I would say. Okay, so this is like the monetary system, I would say. Okay, these were like the bank loans. Okay, this was like the base money. Okay, this was like the broad money. So this was like, they started rebasing. Okay, in 1999, they had like up to 100. I mean, that was the thing. So it had failed at that time due to some reasons. I mean, they started infusing the money and all, but something went wrong. Well, that's all we have from the presentation area. Do follow us on the social media like Twitter, Facebook, and Google+. Okay, you can also try our investment game on Facebook if you have, and thanks for your attention. If you have any questions, I will be more than happy to answer those. Thanks. Here I have one of the questions. Which one of the commercial banks get the money from central banks? Everyone or some special ones, few selected? How this injection works between the central banks and the commercial banks? What happens is like there is like a borrowing system which takes place. Exactly, I'll not be able to. We have some short time, so I'll not be able to explain you. But what happens is like these banks, when they are in need of money, uh, well, during crisis or anywhere. So what happens is like the central banks give or lend money at certain interest rates. Okay, that's like you can say the repurchasing rate, okay, or the refinancing rate rather. Okay, so at that time your infusion of money takes place. So that's where you get this money. Well, again, there is a certain procedure. I'll not be able to tell you exactly, um, but that's how the infusion takes place. I hope I'm able to answer those questions. And again, you have a second question from how much this injection works between the central banks and the commercial banks. Well, there's not a certain percentage I can say, okay, but when you inject the money at, well, I'm not from the commercial background, I can say I'm so sorry about it, okay, but definitely there is some procedure of injecting some, injecting the money or infusing it through the commercial banks from the central banks. Next question, please. Any questions? I think that's all we have from the presentation area. Thank you. You have a nice day. Bye-bye.